Good day, ladies and gentlemen. In this video, I'll be teaching you a very powerful strategy that you can use to make money in the forex market. I call this strategy the gold killer. Okay, so a lot of people are scared of gold. You know, gold is very volatile, very crazy, and it can perform all manner of wonders. But the only good thing about gold is that it has very, very tight pips. Okay, you can see. Look at this. Sorry, tight spread. I meant to say tight spread. You can see how tight the spread is, and if you get the direction right, you'll be sent into profit very, very fast. But in the same way, if you get the direction wrong, you'll be sent into losses very, very fast. All right. So gold is, very, very volatile and it's crazy, but I have a very powerful strategy that I can use to trade gold, which I'm going to be teaching you. This strategy can be used for other pairs, but you would need to go and back test on your favorite pair to see how it goes before you start using this. But personally, I use this on gold. Okay, so what's this strategy about? This strategy is an ORB strategy. Okay, ORB. Okay, ORB simply means open range breakout. Okay, it could be any type of open. It could be the New York Open. Okay, it could be the New York Open, it could be the London Open, it could be the Asian Open. There are different types of open range strategy, but what I'm teaching you has nothing to do with all those ones. Okay, I'm giving you a different style, a peculiar style of trading with the ORB. Okay, so what you just need to do is you need to go to your hourly time frame. Okay, as you can see, I'm on the 1 hour time frame. Okay, you can see H1 up there. So this is 1 hour time frame. Okay, so go to gold, go to H1 time frame. On the H1 time frame, you have to look for the first candle of the day. The first hourly candle that formed is what you want to mark. Okay, and when it comes to open range, what's it called, breakout strategy, what you simply need to do is you are actually trying to get a range of the first candle. Okay, so any part that gets broken first, if it's the upper part that gets broken first, then you are looking to enter a buy trade. If it's the lower part that gets broken first, you are looking to enter a sell trade. That's what open range breakout system is all about. So the way I use it on gold is you have to get the very first candle of the day. All right, so that's the candle you are going to be using, when it comes to marking out its range. Okay, and as usual, I'm going to be giving you 2 weeks of back test, so you need to calm down and actually watch this video. I'll back test for 2 weeks. I'm not trying to just give you a strategy, give you one example or two examples, and that will be all. Then by the time you start back testing, you find out that it does not even work. Probably those two examples I gave you are the only areas where it did work. Okay, so this one I'm giving you full 2 weeks, and the 2 weeks has to do with the last 2 weeks. Okay, so I'll backtest up to the most recent data. Okay, so last 2 weeks is what I want to backtest. You are going to see where it works, you're going to see where it did not work. So just calm down and follow me. Okay, so this is Sunday right here. Anywhere you see double vertical broken lines, that depicts Sunday, and then this day is Monday. Okay, so let's start on Monday. You can see what do we have right here. Here is the first candle. The first candle is this one right here. Okay, that's the first candle. So I'm going to mark out the highest part of that candle, the eye of that candle. Okay, then I'll mark out the low of the candle. All right, so that candle is perfectly marked out. I have the high and the low of that candle. This is the low of the candle, and this is the high of the candle, right? So what do you see happening? The next candle was bullish. It broke and it's closed above the range. All right, so what you do, very, very simple. Anybody can use this strategy because the rules and regulations are very simple. If it breaks and closes above, all you need to do is enter a buy trade instantly. You don't need any further analysis. No further analysis. Where are you placing your stop loss? Very simple. You're placing your stop loss a few pips below the candle that broke out. Listen to the instruction. You place your stop loss a few pips below this candle that broke out of the range. So your stop loss is going to be somewhere down here. And what will you place as your take profits? Target 1 to 1. Target 1 to 1. Whatever you are risking is what you are targeting. As simple as that. So if you enter 2 trades, fine. You can, when it gets to 1 to 1, you can close one trade in profits. Then the other trade, you can move your stop loss to break even, or cover what's it called push it into a little bit of profit, then see how far it can go from there. Okay, so that one falls under trade management. How you manage your trade, it boils down to your own experience and your own style of trading. Okay, but the assurance I'm giving you when it comes to this strategy, 100% assurance that I'm giving you is one to one. It will always hit your one to one if it's going to play out. Okay, so if you placed your what's it called, your stop loss here, you enter the buy trade, definitely market came down a bit, put you in a little bit of drawdown, but what happened, it pushed up, so it did not hit your stop loss. You can see this retracement did not get to the bottom, which is where your stop loss is going to be. It's going to be down here, so it retraced, then it pushed up, and definitely would have given you a one-to-one risk to reward ratio. You can see how far it went. Okay, so you can't tell me that you entered the trade somewhere here. Let me place it here. This is where you entered your trade. Okay, your stop loss is gonna be somewhere a few pips below that candle. Okay, so one to one would be somewhere around here. Somewhere here would have given you one to one. Okay, so this is what you're risking, and this is your take profit. So your take profit would have been it, and your stop loss wouldn't have been it. So this is the first trade and the first win. So let's move on. You are done for that day. You are done for the day. Once your take profit is it, you are done for the day. Okay, so you move on. You ain't trading for that day until the next day, and I can see the next day starting here, which is Tuesday. You can see these broken lines. This broken line shows you that you have entered a new day. So you just what's it called, I have these horizontal, these vertical broken lines you see are period separators. Okay, they call them period separators. You can put them on your charts, if you're using MT5. Okay, so the very first candle that formed on this day, I'm going to be marking out its boundary. Okay, this is the top of the candle somewhere here, and this is the bottom of that candle. Okay, so that's the first candle that formed. All I need to do is to wait for a candle to break and close above or below. So this candle broke and closed above, very obvious and visible, even a blind man can see this. So this closed above, so I'm taking my trade immediately. It is closing, and my stop loss is going to be a few pips below this. So let's see how it would have played out if I placed my entry right here, because that's where the candle closed. My stop loss is going to be a few pips below that candle that broke out somewhere here. Where you might take profit be, let me use this other horizontal line as my take profit. My take profit is one to one, so I just need a a distance that is similar to this space right here. So let's say somewhere here, I know this is even above one to one, but let me just place it here. So what do you see happening? Price pushed from that level, did not come to hit your stop loss, but pushed up and struck your take profit. So this is second trade on Tuesday, and this is another win. As simple as that. So you're gonna see where it failed. I'm not hiding anything. Just follow the rules. Follow the rules. Okay. A good strategy is not a strategy that does not lose. A good strategy is a strategy that wins more than it loses. So at the end of the day, you're gonna be left with net profit. Let's go to Wednesday without further ado. Okay. Alright, so I can see vertical broken lines right here. Okay, so this is Wednesday. Where is the first candle of the day? Okay, so this is the first candle of the day right here. Let me mark out the high and the low of that. Okay, alright, so I've marked out the high and the low of that day, Wednesday. So I have two wins, do not forget. So this is the low and the high. Market breaks and closes below. I place my stop loss below that. This candle that broke out, I placed my stop loss above it, and I would have entered a sell trade right here. And guess what happened? Price came back to hit my stop loss. So I have two wins and one loss. Okay, two wins and one loss. Nothing is hidden, everything is clear right here. Okay, so let's see what happened on Thursday. This vertical broken line right here, a new day, Thursday. We won Monday, we won Tuesday, we lost Wednesday. So where is the first candle of the day? Let me mark out its high and its low. Okay, this is a very small candle right here. So this is the high and this is the low of that candle somewhere here. Okay, so what do we see happening? A bullish candle broke and closed above it. so I'm entering a buy trade instantly. So I'll enter a buy trade in order to push upwards. My stop loss will be a few pips below that candle that broke out. So let me use these lines to show where I would have placed my entry and stop loss. So I would have entered right there, and my stop loss would have been a few pips below that candle, somewhere around here. Okay, and my take profits would have been somewhere right here. Let me just place. So my take profit will be somewhere around there, 1 to 1. I know it's a bit above 1 to 1, but I just want to place it that way. Okay, so market came down close to our stop loss, but did not hit our stop loss. Then it pushed upwards. Let's see. So it pushed up and hit our TP. Okay, all right. So 3 wins and 1 loss. So far so good. 3 wins and 1 loss. Okay, so this is Friday. Okay, this is the beginning of Friday. So what happened on Friday? Where is the first candle? I have my first candle right here. I'm marking it out. High of that candle and the low of that candle. Okay, beautiful. So what do we have? Market broke and closed below. I'm entering a sell trade. Enter a sell trade right there. So what do we see happening? Sorry. Okay, so this is where I would have entered my sell trade. My stop loss would have been somewhere a few pips above that low of that breakout candle. Okay, so that's where I place my stop loss, and I'll target 1 to 1 so I will get out of the market. 1 to 1 should be somewhere around here if I'm not mistaken. Let me delete this one. Okay, so you can see my 1 to 1 is even greater than 1 to 1. This space is more than that space right there. Okay, but I'm just trying to give you an illustration to show you that it goes a bit above 1 to 1. So what do you see happening? Markets came back, retraced into the range but did not take us out. Okay, then it pushed in the downwards direction, striking our take profits. Okay, so right now I have 4 wins and 1 loss, right? 4 wins and 1 loss. Okay, so this is Sunday, end of the week. Then this is a new week. Okay, so the previous week, what do we have? The previous week I have 4 wins and 1 loss. Okay, 4 wins and 1 loss. Out of the 5 trading days, I had 4 wins and 1 loss. So let's look at how the next 5 trading days is going to play out. So this is Sunday and this is Monday. So on Monday, this is the first candle right here. I want to mark out the first candle. Sorry, this is the first candle. Mark out its range, high and low. Okay, so what do you see playing out? The low got broken. I would have taken a sell trade right here, placed my stop loss a few pips above that. Market went against us and struck stop loss. Okay, so out of 6 trades now, I have won 4. And I lost 2. Okay, so you just continue, follow the rules. Your edge is going to play out. Don't feel bad when you lose, just make sure you're following your rules. Okay, so let's go to Tuesday. Monday did not favor us, so let's go to Tuesday. This is Tuesday. This is a new day. This is the high right here if I'm not mistaken. No, this is the high somewhere here. Okay, and this is the low. Right here. Okay, so high and low perfectly marked. And what do we wait for? We wait for a breakout. So markets broke out above, so I'm entering a buy trade. Okay, so this is where I would have entered my buy trade right here. When that candle closed, my stop loss, I'll place it a few pips below that candle, somewhere around here. Okay, then I'll target 1 to 1. Where could the 1 to 1 be? Let's say somewhere around here. Okay, so somewhere around here is where my 1 to 1 would be. You can see that this space is actually bigger than this space, but I'm just using it as 1 to 1. It's a bit more than 1 to 1. So market retrace, putting us in a little bit of drawdown. So let's see how it played out. It's pushed up, and then it's pushed up, gave some consolidation, then finally pushed in the opposite direction to smash our TP. So right now, after this Tuesday trade, I've won 5 trades and I've lost 2. So let's move over to Wednesday and see what played out on Wednesday. Okay, so this is Wednesday right here. So Wednesday, let me mark out the high and the low of the first candle of Wednesday. This is on hourly charts. Let me delete this. Okay, so I have this. What do you see happening? Market broke and closed above. Okay, so market broke and closed above. What do? We are entering a buy trade. Entering a buy trade, so I would have entered my buy trade somewhere here when that market is closing. When that candle closed, my stop loss, I'll place it a few pips below. Okay, if I didn't place my stop loss, if I did not give enough space for my stop loss, this silly candle that returned would have taken us out. Okay, so please give some rooms below the first candle for your stop loss. Okay, a better way to do it is to place your your stop loss below the below the first candle. But I don't like placing it below the first candle because sometimes it will give you a big stop loss, so you can just use your discretion. Okay, so let's say we placed it here. Market returned, in the downwards direction. If your stop loss was not properly placed, it would have taken you out, so you won't partake in the actual upwards movement. So assuming I'm targeting a 1-to-1, given that I was not taken out, assuming I'm targeting a 1-to-1, would this have delivered? Let's see. Yes, it would have delivered because it got to this point. Alright, it got to this point, so it would have delivered. Let's see. It came down again to reach the stop loss position, then it's pushed up again. Okay, so let's count this as a loss trade. Let's count this as a loss trade because it didn't really move as expected. So let's count it as a loss trade. Okay, so Wednesday is another loss trade. How many trades now? I think I have about 5 trades won and 3 trades lost. Okay, so let's move over to Thursday and see what Thursday holds for us. So Thursday, first candle of Thursday is this right here, and this right here. Okay, so where do we have a breakout? We have a breakout in the downwards direction. Okay, market broke and closed in downwards direction. So now the market has closed in the downwards direction, I'm looking to sell, so I'm gonna be selling right here. Okay, I'll be selling right here, and my SL will be a few pips above that particular above that particular candle that broke and closed. Okay, so I'll manage my trade to the downside. If I'm targeting a 1-to-1, this even gave me more than 1-to-1. You can see this is my candle. Okay, and look at this space and look at what I have here. So this would have delivered. So what do I have now? I have 6 trades won and 3 trades lost. So let's look at the last trade, which is Friday. So what happened on Friday? What played out on Friday? I'm marking out the high and the low of Friday. Let's see how it's gonna go. High and low of Friday, perfectly marked. Okay, so high and low of Friday perfectly marked, and market closed above, on Friday. So market broke and closed above on Friday, so I'm looking to take a buy trade. So at this level where the market closed is where I would have entered my buy trade, and a few pips below that breakout candle, okay, is where I'll be placing my stop loss, and I'll be targeting 1-to-1. So where would 1-to-1 be? Let's say it's going to be somewhere around here. Okay, so let me move it up a bit, somewhere around here. Okay, so what do you see happening? Market pushed in the upwards direction without giving us much drawdown, smashing our take profit position. So all in all, we had 7 wins, okay, and 3 losses with this strategy. That third loss, if you were very, very sharp and smart with it, you might not have lost that particular trade. So it's more like 8 wins and 2 losses. But if you want to just give it, let's just take it as a loss. Okay, so 7 wins and 3 losses. That means out of 10 trades, you won 7. So that's about 70% accuracy, 70% strike rate, which is not actually bad. Okay, so if you got any value from this particular video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.